Hello, everyone. My name is Luke Pelger with GreenPath Financial Wellness, along with my colleague Shamika Joseph. And as we get started here, just want to highlight a few things. First, all phone lines are muted. Please use the chat to ask questions as well as add comments. We'll have time at the end of today to answer questions and also review any comments that you put in. Second, you all will receive a copy of today's webinar, so feel free to share this with others that might find the content helpful. I'm the host, and we'll share a little bit towards the end of today as well, but I want us to get right into today's topic. Our presenter today is Shamika Joseph. Shamika is a learning experience designer here at GreenPath and has been with the company for 5 years. Prior to her current role, she spent several years as a financial wellness expert, providing education and counseling to individuals on personal finances. Thus, she's well equipped to teach us about today's topic. Welcome, Shamika, and take it away.
Awesome. Thank you so much, Luke. And thank you everyone for joining us today in today's webinar, Teaching Your Kids About Money. So no age is too young to talk to your children about money. Providing your children with age-appropriate concepts early will make them better prepared to handle tough financial decisions throughout their lives. Today, we will be talking about opportunity costs, earning money, savings and checking accounts, budgeting, credit, and then we'll be wrapping up with some tips to be successful when teaching kids about money. And we do have some time saved at the end for any questions you all might have. So we can go ahead and get started. All right, so let's start out by looking at how to use opportunity costs as a fundamental part of teaching money concepts. So the first step is to determine how you want to explain the concept to your children. Of course, that is going to depend on their age. The concept of opportunity cost is the basic idea that spending money now will leave less money in the future to buy items. So what do you have to give up in the future? So an opportunity cost is the regret you anticipate from not taking another option. So essentially, spending money now will leave you less money to buy items in the future. So you will want to determine the best way to explain this concept based on the age of your children and their maturity level. What might work for one child may not necessarily work for another. Think about what matters to them and what they might regret losing based on their choices. So for example, you want to give the child a choice of spending an hour doing chores so they can earn $12 so they can go to the movies with their friends. Or they can spend 3 hours doing chores and earn $40, but they will potentially miss out on that movie. So the idea is to reinforce the value of work and the spending power it can give them while also reinforcing the idea of opportunity cost. Giving up the movie now for 2 hours of work time will give them the opportunity to go to the movies 3 times in the future instead of just one time right now. All right, so since we did briefly touch on earning money, let's continue with that. Discuss with your children the ways you earn money and the choices that you can make with that. Talking about money may be a difficult conversation for you to have, and it can potentially be difficult for your child to understand. Keep it at their level and ensure that you have the time and are in a good mental state to have that conversation. So if you are tense, it can create negative associations for your children. So this can start the foundation to encourage your child to earn money, as it will promote independence and begins to teach them important financial skills. So this could be chores around the house or, depending on their age, a potential job. So you want to explain how you earn money to pay for things. So help them to understand where the money to pay for the household expenses comes from. Explain how your household earns money and then make decisions on how that money will be spent. And there are limits on what is available. Review with the child what a need is. There are certain obligations that are non-negotiable and need to be paid first with available income. Get a calculator and show them how you cover the needs before anything else. Take the amount of income available, subtract the needs, like rent or mortgage payment, car insurance, car payments, health insurance, utilities, food, and savings. Explain to them why you have determined them to be needs. And of course, this can vary for each family. Not everyone is going to have the same expenses and needs as your family. Next, you want to discuss the wants. So wants will also have different priorities and can be considered a need at a time. For instance, clothes and shoes may be a need. However, clothes and shoes of a specific brand may be a want. Help reinforce the idea by giving them real life experiences. For example, take your child to the grocery store for a weekly grocery trip. You want to have a list and your budget. So as you shop, keep track of what's being spent. And if your child asks for extras, keep them to the side. Once everything on the list is already added to the cart, add it up and see what's left in the budget. Let them know that you have purchased the needs and now there is X amount to get the want. Let them determine what their priority is and if it fits into the remaining budget. So now is the time to give your children freedom to make choices and the money to learn from those choices. For younger children, you may want to give them chores to earn money. Continue to reinforce the concepts of opportunity costs and explaining wants and needs. But also make it fun. Make it a fun project. So you can find 3 small containers and let them decorate them and label them with needs, wants, and savings. Have them think about the purpose of each container and how much they need to accomplish the purpose. Try to keep it small and simple so they don't get frustrated that it may be taking too long to accomplish. Every time they earn some money, have a conversation on what container they will put the money in and why. Try encouraging them to divide it up between each container. For preteens and early teenagers, help them determine when they are responsible and ready to earn their own money. So this can include doing odd jobs in the neighborhood, babysitting, mowing the lawn, dog walking, etc. They may be wanting to earn more money than they will get from doing chores and will potentially have bigger needs and wants. It's still important to help them determine how to utilize the money they earn to reach their financial goals. If you haven't already, you will want to be sure that they have a savings account established, and we will talk about that next. So for children over 15, you can discuss a part-time job on like weekends or during breaks and set ground rules and expectations for the money earned and what it can be used for. So now is an excellent opportunity to have them think about more long-term goals, like for example, paying for college or saving for retirement even. It's never too early to get started. So with that, we're going to discuss savings now. So saving money is one of the most important lessons to build wealth and have a secure financial foundation. Again, you want to determine ground rules for any income that has been earned. How much will be put into savings and how much can be used right away. Starting early will create that habit of saving and will provide the foundation for long-term saving success. So you may have previously heard of the 50-30-20 strategy, which is you spend 50% of your income on needs, 30% on wants, and 20% on savings. So depending on the situation, this may not be realistic initially, but it can always be something to strive for. The most important part is to put something away from savings. So if the money does come from a payroll, ideally the funds should be automated and go towards a savings account automatically. It is much more likely to happen and much more likely to stay in the savings account if it doesn't require someone to initiate that deposit. For younger children, start with like a piggy bank or a clear jar so they can see the benefits of their dedication. Talk with them about how they plan to use their money and how much they need to save. Again, set a small goal so they don't become frustrated that it may be taking too long. So as your child gets older, take them to your financial institution and help them open a savings account. Talk about goals for the money that they will be saving. So this is a great time to start the conversation about short-term goals. That's something that can be accomplished in less than a year. So for example, buying a new game for the gaming system, like a PlayStation or etc. Or also long-term goals, like to save to purchase a car or potentially for college savings. So you want to create a visual tool for your child so they can see the fruits of their labor. Create a chart that can be colored in as money is deposited so they can see how close they are to their goals. Since your child already has a savings account and has been setting money aside for both short-term and long-term goals, it's now a good time to discuss compounding interest. So we all know that if we started saving at 18, we would likely retire with a comfortable nest egg, in part due to the power of compounding interest. Compounding interest is a magical thing. It may be small, it may seem small at first, but compound interest can provide significant earnings over time. For example, your child gets a $200 gift and they put it in their savings account. They add $50 a month from their part-time job. They earn a 4% rate of return, and in 5 years, they will have $3,559. So that's a lot of money, and seeing that math may be the incentive that they need to help them save even more money. All right, so now that your child has a better understanding of opportunity cost, goal setting, and savings, now is time to open up a checking account. So in most cases, an adult will need to be on the checking account if your child is under 18. So having a checking account in place before your child starts their first official job is important, as most employees will deposit their paycheck electronically into a savings or checking account. Ideally, they will split the deposit both into their checking and savings account. So you've already been working hard to set the positive habit of savings, so definitely don't stop now. Explain to your child how a checking account is different from a savings account. So a checking account is intended for the money that you expect to spend in the short term. They are designed to be accessed as often as needed to pay for things that you are purchasing up to the amount in the account. A savings account is intended for them to leave the money there until they have saved enough to cover the cost of their savings goal. Be sure to take the needed documents to the financial institution with you so you can avoid multiple trips. So typically you will need an ID to open up an account, and this can be a government issued photo ID, a driver's license, a student ID, a birth certificate if no ID for the child is available, proof of residence, and of course the money needed to open the deposit, the account. However, this does depend on your financial institution, so definitely double check with them to see what all is needed. So many financial institutions offer accounts geared towards minors specifically. Look for one that has no minimum balance and no monthly fees. So explain how the debit card works and how it will have a 4-digit PIN to authorize transactions. Once completed, the money will be pulled from the account and a hold will be placed on the account until the money process is complete. Discuss ensuring that the PIN number is something that cannot be easily guessed and something that they will not forget or need to write down to remember. It is also very important to talk with your child about not sharing their debit card and their PIN number with anyone else. If they give the information to someone, they maybe find out that their account has been depleted of funds. So having a checking account is a large responsibility and needs to be managed carefully. Explain that if they attempt a transaction for more than available, it will either be denied, or if that transaction is processed, they will have a negative balance and the financial institution may charge a fee. It is important to know that their account balance and not to spend more than they have. Discuss using online banking tools and keeping tabs on the accounts and the monthly statements. This is a great teaching tool. Help them understand how to read their statements and explain what the different transactions mean. Budgeting. All right, so helping your child learn how to budget and create a plan for their money will be a key lesson in long-term financial health. So a budget is a path to reaching their short-term and long-term goals. Help your child understand that a budget is essentially a tool to ensure their money is covering the priorities and helping them work towards their goals. Like anything that is important, you do need to dedicate time towards it. Consider sharing your budget with them or work to create a household budget while they work on their personal budget. Be careful not to judge their budget choices. Ask them curiosity questions to learn what choices they have made. Even if you may feel like they aren't the best choices, consider letting them continue because learning by experience can be the best teaching moments. It is better to help them learn that all choices do come with consequences. Remember the example of the movie tickets? So helping reinforce this now will definitely help them avoid mistakes when there is much more at risk in the future. Make sure that you have everything you need to successfully start creating the budget. So you want to gather all of the documents needed. So have them gather their income from allowance or odd jobs or pay stubs. Have them get their online banking statements and determine what expenses they are responsible for or if they have taken on any new ones. How much have they been able to save? If generosity is a value that you would like to instill, this can be a great opportunity to start encouraging giving. And now you can create the budget. So we will be providing a budget template that you can use with them to start the budget process. Make sure their budget balances, and if it doesn't, help them determine what changes they can make and stress the importance of a balanced budget to them. And that budget template will be available at the end that we will provide for you. So once the budget has been created, the next step is to determine a method to track the actual spending. A budget is great, but if you don't know if it's being followed, then what's the purpose? You can use an Excel spreadsheet to track the budget, pen and paper, or also there are tons of online banking tools as well as apps that you can use to help track the budget. All right, so now that your child has a savings and checking account created and have also created a budget, now it's the time to start introducing the concept of credit. Like all other topics, you want to gear this conversation to their maturity as well as their age. So if your child, like many, like many other children, they may struggle with waiting. So the need for instant gratification will at times come out. So this is a good learning opportunity. So let's say your child wants a Furby that costs $60 and they don't quite have that in their budget or savings account. So you let them know that you will give them some credit and loan them the money to make a purchase. However, they will need to pay you back each week from their allowance, but it needs to be paid off in 8 weeks. Have them do the math and they determine that they only need $7.50 a week, but they only earn $5 a week. Give them the choice to do extra chores to earn the money, or they can wait until they have saved enough to make the purchase. Ensure that they understand if they don't make their loan payment each week, the toy will be taken back or repossessed. Now, this life lesson will work only if you follow through and make them pay you back after they get the chore money and take back the toy if they don't earn the required amount. But this can be a great introduction to the idea of credit and also the importance of managing credit responsibly. And continuing with the topic of instant gratification, one more recent thing to look out when discussing purchases, specifically online purchases, is buy now, pay later services. So buy now, pay later services allow the shoppers to make large purchases that can be financed in 4, sometimes 6 payments that are paid in monthly or biweekly installments. So for example, a shopper may be making a $100 purchase, but with buy now, pay later, they can have an initial $25 down payment and then have 3 more $25 recurring biweekly payments. If you shop online, you may have also seen some of these buy now, pay later services, such as like Klarna, Afterpay, or Affirm are a couple of the most common ones. So buy now, pay later services are typically offered when shopping online as like an alternative to shopping, and will allow the shopper to purchase their items instantly and receive them instantly, but pay over time. Buy now, pay later services can be attractive to younger shoppers, especially for those who have jobs for the first time, as they can allow biweekly payments that can align with pay periods. And they can also be used on almost any website for small purchases of $100 to maximum amounts set by the services. So buy now, pay later services are sometimes marketed as an alternative to credit, as they typically only require like a soft credit inquiry, but many times no credit check at all, making it easy for children and teens to use these accounts. But it is important to note that these buy now, pay later financing payments do not help build credit. So these payments are not reported to the credit bureaus, and any missed payments can potentially be sent to collections, which can negatively impact the credit. You can guide your child on using these services responsibly. So if there is a large purchase that they are wanting to make but may not be ready to spend all at once, it may be worth having a discussion about using buy now, pay later and the importance of making those payments on time. But also you want to avoid having multiple purchases all at once, all open at one time, as it is very easy to accumulate those payments, and that can lead to potential overdrafts as well as missed payments. Buy now, pay later, it can help your children understand the importance of making payments on time without having any actual impacts to the credit. But however, if your goal is to establish responsible credit use, it's best to avoid these services. All right. And switching gears back to credit. So as your children get older, it is important to know that credit is considered anytime you are requesting a loan to buy something, renting an apartment, and in some cases, even getting a job. You want to let your child know that a credit bureau gathers information on us to share with financial institutions, landlords, and potential employers even to determine if they want to lend them money, rent to them, or give them a job. It is a history of how you've managed your money in the past and if you have paid your bills as agreed. If they are curious, you can tell them the 3 credit bureaus are Experian, Equifax, and TransUnion. You may also want to obtain your free credit report at annualcreditreport.com, and you'll be able to show your credit report to them. The credit bureaus take the information that has been reported to them by creditors, landlords, or other people you may owe money to, and use it to determine your risk level. So whether you are likely going to pay back your future credit. So this is done with a credit score. So your credit score is a 3-digit number that helps companies that make decisions along with your income as well as assets. So once you feel your teenager is ready to take on the responsibility of credit, consider adding them onto your credit card as an authorized user. So be sure to agree to the expectations on the credit and on how the credit will be used and who will be responsible for the charges. So this is a great way to allow you to monitor your usage and help them avoid any bad behaviors. So typically the minimum age to be added as an authorized user is 13. So after proving they have responsibly used the card and they are over 18, and they're 18 years or older, it is time to move from an authorized user to a joint account with you on a secured card or a potential student credit card. So under the 2009 Card Act, even for secured credit cards, the applicant does need to be 18 or older in order to open up their own credit account. Okay, so at a high level, you want to be sure that they understand the responsibility of credit. Explain to them that credit cards have limits, the total amount that you can, which is the total amount that you can spend on the account, and due dates. It is best to pay the balance in full on the account each month to avoid the interest charges. However, making the minimum payment on time is essential to preventing negative credit reporting to the credit bureau. So each credit account will have a maximum credit amount that they can charge. So staying below that limit and ideally not wanting to charge more than 30% of that limit will maintain a healthier credit score. So you only want to encourage applying for credit when needed. Applying to obtain discounts or something, or potentially applying to obtain something for free can negatively impact the credit, and multiple accounts can make it more challenging to keep track of everything. Finally, monitor your credit accounts and credit reports regularly for accuracy as well as for fraud. All right, so now I hope everyone feels ready and confident to talk to their children about money and give them a head start to being financially healthy adults. So as we get ready to close out this workshop, let's talk about some tips for success. Leading by example. So as we mentioned earlier, lead by example. Show them your budget, the choices that you have made, and how you have overcame those hurdles. Talk freely with your children about money based on what is appropriate for them. You don't want to create any fear around the topic, but let them know at times in life you may need to say no to a spending wish, and you may have to make adjustments in your financial plan. Reinforce good habits. So when they ask questions, let them know that you appreciate their curiosity. When they reach a savings milestone or hit a certain goal, celebrate it. And we know that managing money can be at times stressful and definitely can be overwhelming. However, not giving up and continuing to practice good habits is essential. Just like playing a sport, the more time we invest, the easier and more enjoyable it becomes. And finally, we don't always have to fix things for our children. So although it may seem easier to try and fix it for them, giving them lessons early in life will help them avoid more costly mistakes in the future.
And as Shamika alluded to, after the session today, everyone will get the recording. We're also going to send out some resources. On the screen here is a QR code for the GreenPath website. So feel free to go to the website to access resources that we have there. We have recordings of other webinars. We have some worksheets and guides and articles that can be used. We'll also be sending out the 2 worksheets that we see on the screen here. We'll attach those to the email, so you'll have the ability to use both of those items. And then in addition to what we'll send out in the email, we also have an online learning platform called Learning Lab Plus. And this is great for especially teenagers who like to do a lot of things digitally nowadays. This platform, people can register for free. We have courses that people can take on their own on various personal finance topics. A couple of the courses here that are great for teenagers and even young adults and maybe even for you. We have courses about credit, so learning about credit, how to establish and build credit. We have a course on checking accounts, how to open and manage checking accounts. We also have a course on navigating auto buying. So feel free to register for this yourself, share it with children who are of the age that can do some of these things online. Let them learn on their own about some of these topics. So there's a suite of courses available for people to choose from. So take advantage of all the resources available through GreenPath as well. Also, you're free to contact GreenPath. As you know, GreenPath is a national nonprofit. Our mission is empowering people to lead financially healthy lives. So we can help you take a look at your budget, talk through some goals, talk about savings, talk about credit and managing and improving credit as needed. We, as far as our overall services, we help with reviewing, again, your credit as well as your budget. We also provide housing counseling. We're a HUD-approved housing counseling organization. We have debt management plans for helping people that want to get some support with addressing debt and having a timely repayment on those debts and getting those resolved quickly, as well as student loan counseling. So take advantage of GreenPath for yourself. Help yourself as you're helping your children too. It's okay to just call and get a checkup. I've called GreenPath myself just to get a checkup on my budget. So feel free to utilize our services. Talk about what you're experiencing with finances so that you can also take that experience and that knowledge and share it with the children you might be teaching in your life about finances, in addition to what you might have learned from today's session. As we start to round things out, we do have time for questions, as we mentioned earlier. We also put a few prompts on the screen here. Feel free to use the chat to certainly ask questions. In addition, if you don't have a question but just want to comment or add to the conversation, everything that you chat in will just go to me and Shamika. It won't be shared with the group at large. So know that we'll keep anything in confidence or won't share a name of who typed something in. But feel free to respond to one of the prompts here. Is there anything you liked today from today's session? Is there anything that you learned that you wanted to call out? Is there anything that you plan to do based on what we shared today? I like to have people respond to prompts and have us just kind of share those out with the group verbally so that other people can see what the value was of today's session, or maybe be encouraged about some of the comments or questions that they see here, or maybe even point out, was there a tip that you found really insightful that you might want to continue to take time to think about? So respond to those prompts in the chat, or ask questions in the chat. We already have a couple that came through, and we'll start to take a look at those. So I'll start with we'll go to the last screen here, and then we'll start to address what's in the chat. So again, feel free to reach out to GreenPath yourself if you'd like to go through a financial counseling session or get some questions answered, as well as learn from the website as well. A couple comments. I'll start with those. I kind of like what we see here. One person said they didn't know an authorized user on a credit card could be as young as 13. So I didn't know that as well until Shamika and I were doing the planning on this, which is great. Someone else said, I like the idea to decorate the container for kids to put the money in. So if they have like a container for like a piggy bank or, gathering that money, let them decorate it to make it their own, make it personal. Another person said the authorized user age was helpful. Someone said, I plan to share this information with my siblings so they can share it with their adult children and grandchildren. Great. Another one, share the information with my 5 grandchildren. Awesome. A couple questions. Let's start with first question here. Question about prepaid debit cards. People have heard, this person says, I've heard people using prepaid debit cards to help their kids learn to spend money. Do those help establish credit, or what can I know more about prepaid debit cards?
Yes, so with prepaid debit cards, a certain amount will be loaded into them, and they are able to spend what is the maximum amount that has been loaded onto the prepaid debit card. Sometimes they can be reloaded, but they do not build credit. So they do work in the same way as a debit card would that you would be getting from like a bank account. So they're good as far as establishing spending responsibly, like only spending what you have access to and not going over that. But as far as actual credit building, being an authorized user or having a secured account would be a better route to go for building credit.
Yeah. Yeah. And clarity on those is really helpful because cards are everywhere now, right? We have gift cards, we have debit cards, credit cards, prepaid debit cards, right? So just understanding the different tools and what the tools can do or cannot do can be really helpful there. So thanks for that additional clarity there. Someone else asked, at what age can you start talking about finances? What's your opinion on that, Shamika?
Any age.
Yeah.
I think any age. I think it really just depends on how you have that conversation. So the younger they
Mhm.
are, if you want to give them examples um, that may be more suited for them, but still like giving them a dollar or coins or things like that, just getting them familiar with money at any age, I think
Mhm.
is good to start with finances, and the younger the better that they, and of course tailoring that conversation as they get older in ways that will make more sense to them, but as far as an age limit, I don't think there is one. So
Yeah. Yeah. You're never too old, right, to learn about finances. And then, when they can start to, understand money, right? There is no too early. Yeah, to your point, it's age appropriate. The key term there that I'm grabbing onto, Shamik, is age appropriate, right? Or the level that they can comprehend, which is really helpful. Someone made a point regarding the prepaid debit cards, a good point that we'll want to make the group aware of. Um, no consumer protection on prepaid debit cards, right? So there's a difference, right? Certain types of cards, like a credit card, may have certain consumer protection where a prepay debit card may not. So just again, understanding the components of those tools, very important. Easy question I'll answer. Will there be a recording? Yes, is recorded, and we'll share it out with everyone that registered and attended. Um, Another question that came in, I made note of it here. Someone says, in helping to set my child up for success, they're 13 years old. What are some of the best long-term savings vehicles? Do you have thoughts on that?
that's a great question. Long-term savings vehicles, I definitely think starting with the savings account, especially that compounding interest, is a good place to start. Long-term, do you have any suggestions, Luke, that you may be thinking of as far as long-term?
Yeah, I feel like that's very um, personal in the sense of what are the goals? Um, at what stage is the child as far as earning money? How will that, progress over time? Savings account is a great place to start just to get the basics down, put the money there. Um, I don't know enough about starting investment accounts or retirement accounts. I know someone under the age of 18 can have something like a Roth IRA and start saving for the future, but that kind of gets into things kind of beyond the scope of today and might um, have to be looked at more closely in each individual situation. But starting with the savings account, maybe also teaching about different products like certificates of deposit, understanding what those are and how they work. There are some ways you can kind of teach, savings a different way using that type of tool. So once you get into, you know, to 16, 17, 18, then you can maybe start to branch out with long-term savings vehicles. But the goal is, what are you saving the money for? Do you need to grow that money or not? So that would take you in all sorts of directions that, not knowing the goals of the individual, that'd be hard to answer. But that's a really good question. And starting to ask that question now may give you some, lead you down some different paths later, which is great. Let's Someone asked here, I'll take this one. What is the best bank for opening direct deposit for first earning of age 16? Go to your financial institution, right? You may have heard about this webinar through your financial institution. Just talk to them about what accounts they have. Lots of different types of accounts are available, but as Shamika mentioned, geared towards a lot have accounts geared towards youth and minors that you can take advantage of. So yeah, just talk to the financial institution that you heard about, or that you heard about the webinar from, and I'm sure they can guide you from there. A couple other comments. Someone liked the information about buy now, pay later. I like that too. That's definitely an important topic these days. They like the decorating of the glass jars. Someone else asked, are there some materials that we can use with our kids, something they can use to read? We will include, as part of this webinar and the accompanying documents, there's a reading list. There are some resources that we recommend that can get kids starting to learn by reading about the topic. So we'll send that out as well in the email afterwards. I'm scanning here, so a couple good additional comments about the webinar. Let me just scan through. More people want to share with children and grandchildren. Wonderful. Yeah, someone mentioned CDs and high yield savings accounts could be good for saving long term, because yeah, a CD, for example, the intent is to keep it in for a certain period of time. So there's 6-month CDs, 9-month CDs, year, 3-year, 5-year CDs. So yeah, you could get potentially a higher interest rate there for holding it there longer. There are some limitations, right? It's something you're not supposed to touch, right? So depending on if the money's being saved, definitely for the long term and doesn't need to be touched, a CD is a great place to look. But if you want to save it, but also have some access to it, traditional savings account works too. So yeah, go to those of you that have questions about where should I have my child start to save this money, go to your financial institution. They'll have a lot of great options and talk you through that and be able to give the specific products that might best fit the situation you're looking for. So thank you for those comments to kind of expand our thoughts on that. This is very important. I like this one, and we'll kind of wrap on this unless something else comes in. Someone said, I like the point about not judging their financial choices, but asking why and letting them learn through experience. That's wonderful wisdom. I'm actually going to copy the comments, not the name, but I'll copy the comments, send that out to everybody so you can see it yourself. That's a really nice point. So thank you to the person that put that in there. Personal finances is a journey, right? We kind of have to grow and learn as we go, and we're all at different stages. So yourself, as well as those that you're helping learn about this topic, there'll be bumps along the way, but we can learn from mistakes. We can learn from others' mistakes. And the goal, though, is to just have a financially healthy life. And the more we practice it, the better we'll get. So thank you for the wonderful comments and questions from today's session. Shamika, any closing comments on your part?
Yes, so I do want to thank everyone for attending here today, and definitely like that we're wrapping on the learning through experience, because even as adults, we're all still learning through experiences. So, and it's personal finance is definitely a journey, but never too young to start or too old to start. So,
Yep. Yeah. Very good. Great. Thank you, Shamika. Thank you, everybody, for your attendance. We, again, appreciate your interaction and hope you learned through this, and hope that many other people can be informed through this information as well. So feel free to share it as you move forward. Have a great rest of the day and take care, everybody.
Thank you.